Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar price action on Monday was somewhat flat after last week's volatile session near the bottom of the range around 65.2025 held. In light of the pattern, I do feel the bulls are coming back and therefore keeps the upside objective towards 66 to 67 cents. Any weakness again expects to see support from that 65.20 area, since posting a very much large engulfing candle. Looking ahead, this week's docket brings another blockbuster week of high impact data and high risk trading events on the economic calendar, including fresh inflation data out of the US. And also the US Federal Open Market Committee two-day meeting begins today, which widely expects their interest rates to remain on hold, while the US inflation is expected to edge slightly lower. Looking at the euro, the trend or the support area comes in around 107.2025 and is respected. In light of the pattern slowly forming to a potential bullish bias, I think the market will stage an upward move towards 107.90 and on to 108.65. And with the objective at 110. It is assessed while the dollar still remains somewhat mixed around the 104 area. I feel the downside potential still remains anywhere from 101 or slightly lower. Any downward challenges towards 107.2025 should again expect demand. The market volatility in dollar yen is still expected to continue this week after rebounding from the lows around 141.5 and trading now around 145. The bears are still likely to be located anywhere above towards 146. In light of the pattern, I feel the market is likely to fail and look back towards the downside, with the initial call still towards the region of the low 145 and maybe towards 141. We should not discount any whipsaw price action towards this region that could extend towards 138.5. With the downtrend now slowly strengthening, should see the bearish price action return. With Super Thursday getting closer, the market is no doubt looking towards its top side, anywhere towards 126 or above towards 127.1570 area. That call still remains, while the support area, viewed around 125, is intact. After a recent stab there on Friday, did show a bullish response. The RSI is improving, so I still feel the market has potential to gain towards that topside call. Since the bearish confirmation to this large engulfing candle from the 2007, the downside target is getting closer. That is towards the region of 1,969 to 70 area. In light of the pattern, I feel the heaviness likely to increase. I'm not saying at this point that the downside will maybe or could hold around 1,968. It's just a reference point. Reassess from there to see what's beneath, as 1,920 is exposed. Any rebound should be limited towards 2000 or 2012. Wrapping up with oil, the market was a little bit to the upside, but no significant moves were made. With the resistance still capping around $72.60-65, we do need to see a break there to see the market move on to $74 to $78 a barrel. However, a rejection from 72.60-65 would put the focus back on the downside, anywhere towards 69 to the lows of $67 a barrel, and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the day.